traders, and welcome to a fresh week in markets. Okay, so last week was a very positive week, very solid week, especially for equities in markets. And the reason for this is quite simply is we did get a lot of positive headlines last week with respect to tariffs and trade deals. And the big news that we heard was that it seems as if the US has actually made a couple of trade deals with a couple of key trading partners, and it seems as if those countries are, India, Japan, and also South Korea. Now we haven't actually got the details of exactly what those trade deals mean, but the US has told us that those details and confirmation will come in the next week or two. So potentially even this week we may get confirmation of and details of those trade deals. But nevertheless, the fact that a lot of progress obviously has been made is what is moving these markets in a positive fashion. And then finally, obviously, we've got quite a lot of positive headlines as well between the US and China that potentially, that they are getting closer and closer to actually talking, which the market likes, because the relations between US and China is obviously the biggest factor that concerns markets and the world globally. So them speaking is obviously a positive. Now on Friday, what we did see is we had some economic data out, US non-farm payrolls. It's employment data in the US that comes out on the first Friday of every month. It is top tier data. It's one of the most important economic data prints we see all month. Now market was expecting 130,000 for the headline and unemployment rate around 4.2%. The unemployment rate came out steady at 4.2%, but the headline number came out higher than expected at plus 177,000. So that was actually a bit of a surprise to the market. The market started thinking that maybe employers would start, maybe getting rid of staff, and that headline number maybe would underperform, but it didn't. So again, we finished the week with some very positive economic data, and it also shows that the US economy obviously still is in is in good shape, and also the fact that all the negativity towards potentially that the US economy might be going into a recession. So that number sort of took those fears away for the time being. So we did finish the week positive on that. So S&P, what did it do? And Nasdaq, they finished the week. Finished on Friday plus about 1.5%. For the week, they finished around 3.5%. But interestingly, the S&P's actually been up now for 9 consecutive days. So almost 2 weeks in a row, S&P has printed positive. So just to show you just how positive and solid these markets have been trading. So I'd suggest at the moment maybe potentially we've gone maybe too far. So I'd suggest maybe not running and buying these levels fresh longs, but what we do have is some big event risk for this week that I think is going to dictate traffic, and that is the FOMC, the Fed meeting, which is on Wednesday. Now recently we have heard from Fed Powell. He's in no rush to cut rates. He has basically stated that the Fed is on the sidelines and they're in a wait and see mode. The biggest issue that the Fed obviously has is to see exactly how the tariffs affect prices and inflation, whether or not it is actually inflationary. Obviously, if it is, the Fed does not want to be cutting into inflation rising, and so at the moment that's why the Fed is. As Fed Powell said, in a wait and see mode. Obviously, that has angered Trump, where Trump has basically said he can't wait, to see the end of Powell, and that he knows interest rates better than Powell, that he should be cutting rates immediately. So there has been a lot of political pressure on the Fed. That's why this meeting is going to be exceptionally interesting to see how it plays out. So whether or not Powell sticks to his guns with his wait and see mode, or whether or not he caves into the political pressure. And remember the Fed is supposed to be independent. So what's happening here really is something that the market, I guess, is not a positive, right? They want to see that the Fed making independent decisions without being influenced by politics. But in any case, market's going to move on the Fed. So if the Fed is still wait and see mode and isn't as dovish as maybe what Trump wants, or the market say pricing for the Fed, because the market is pricing the Fed to be cutting rates by over 1% over the course of the next year. So if the Fed isn't dovish, obviously there's probably going to be risk off for equities, and no doubt we'll probably see the US dollar bid. But if the Fed does start preparing the market for some rate cuts and for the next Fed meeting in June, we'll probably see these equity markets rally again, and that's going to be a negative for the US dollar. So we'll see the US dollar sell off. US dollar really hasn't been doing a lot lately. DXY has been trading around 100. We haven't seen a decisive break below that key technical and psychological level, but we certainly haven't seen it rip higher from 100 either. So I think markets probably will go into Wednesday, I'd say probably range bound, quiet, and then we'll probably get direction from that Fed outcome, and when Powell speaks half an hour after the actual rate decision, which obviously there's going to be no change in rates. One market that's obviously worth mentioning is obviously gold, because it's been exceptionally volatile, and it's seen some huge volumes from clients. Last week gold did start the week at 33.40. It closed on Friday at 32.40. So gold actually lost $100 over the course of last week. Now gold trades the opposite to the rest of risk in that gold loves bad headlines. The only reason that gold did trade up to 3,500 was all the negative headlines with respect to the tariffs and what was going on. So anytime we get good headlines with respect to these tariffs and potential trade deals, gold has sold off. So yes, it is trading headlines, and I'd imagine that the bias is towards more good headlines coming down the track. So that probably will weigh on gold. Technically as well, gold had a huge support level at around that 32.65.70 area, and that big support level was breached obviously last week, and when it did break that, we did see a lot of stops, a lot of liquidation, and then gold trade down to almost 32 even lows before we saw a bit of a bounce. So that level now, top side, that 32.65.70 area is obviously going to be the key resistance in the short term. So for gold bulls, they really need the market and price to be closing back above 32.70 for the outlook to look technically bullish again. But for bears, certainly that is the level to sell against. Gold certainly does trade in wide ranges. So certainly we could see it break below last week's low, which was 3,200, and down towards maybe 3,150. Short-term targets there for bears. Okay, I guess good luck to start the week, and we'll check back in with you shortly.